Lululemon just released their latest quarterly numbers, and despite what you might have heard, what you might have read from analyst downgrades and headlines, etc., that the company is dying because the stock has fallen, right? Because that's how it works. If the stock is down, then the business is not performing well and the business is dying and everybody else is eating their lunch. While sometimes that might be true, a lot of the time it is not. Lululemon this quarter beat across the board. Annual guidance with regards to EPS was actually raised and beat the estimates by quite a lot. So right now, company is up 13% after hours. These valuation metrics are the ones that were before they released their quarterly numbers, which already showed you how, let's say, cheap this company was compared to its 5-year mean. But even if you don't compare it to its 5-year mean, for a company that is growing, well, it's not growing extremely fast, but it's growing in a profitable way. It's pretty dominant, has high margins as well, pretty popular. It just didn't make much sense for it to be down that much. Year to date, it's down 40%. In the last 3 months, it's down 30%. Now, of course, a bit less. So, yeah, maybe it's true. Maybe the company was flying a bit too high and it showed a little bit of weakness. And we know what happens with that these days. The stock gets hit quite hard. Now, just for documenting sake or documentation sake, I don't know, correct me in the comments below. Currently, the average analyst price target sits at $420.5, representing 36.4% from the price it was at before the market closed. So still quite high. And as you can see, since the last earnings report, the average analyst price target was coming down quite fast. It was previously at $505. Let's see if suddenly we get a couple of upgrades. And so before jumping into this report, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. Want to support me even further, to check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. And so let's start off with a couple of comments here. In the first quarter, we saw strong momentum in our international markets, demonstrating how our brand continues to resonate around the world. Guests responded well to our product innovations across categories, and we are pleased by the progress we are making to optimize our US product assortment. Looking ahead, we continue to have a significant runway for growth and are confident in our team's ability to powerfully deliver for our guests in 2024 and beyond. So, net revenue increased 10% to $2.2 billion and revenue beat estimates by 0.6%. America's net revenue increased 3% or 4% on a constant dollar basis. International net revenue increased 35% or 40% on a constant dollar basis. Comparable sales increased 6% or again 7%. America's comparable sales were flat compared to the first quarter of 2023, but international comparable sales increased 25% or 29% on a constant currency basis. But here's the thing. If there was some weakness in Lululemon, if there was some weakness in that market, won't we see here a decrease in gross margins? Right? Gross profit increased 11% to $1.3 billion. Gross margin increased 20 basis points to 57.7%. I don't know about you, but usually when you see weakness in your business, you maybe go and reduce the prices to get a bit more market share, stuff like that. But here we're seeing again, high margins. Income from operations increased 8% year over year. Operating margin is down 50 basis points to 19.6%. Diluted earnings per share were $2.54 compared to $2.28. So, of course, making more money right now. And GAAP EPS came at $2.40, beat estimates by 14 cents and beat their own guide by 16 cents. With regards to the CFO, we reported first quarter results ahead of our expectations as we operated with agility and continued to make strategic investments in the business. As we look to the rest of the year, we remain focused on leveraging our strength and differentiated model to advance our Power of 3x2 strategy, more on that in a second, and fuel performance. We are energized by the opportunities in front of us and believe we are well positioned to drive sustainable long-term growth. They also repurchased 800 million shares of common stock for a cost of just under $300 million. As of the end of May, the board of directors approved an increase of $1 billion of their stock repurchase program. Including this increase, they still had $1.7 billion remaining. As for outlook, they expect Q2 revenue to come between $2.4 and $2.42 billion, representing growth of 9 to 10%. With earnings per share, expect diluted earnings per share to be in the range of $2.92 to $2.97. For the whole year 2024, they reiterated annual revenue guide, which met estimates, and they raised EPS guide by 27 cents, which beat by 23 cents. So overall, for this year, they expect revenue to come between $10.7 and $10.8 billion, representing 11 to 12% growth year over year. Operating margin for the year to be approximately 23.3%, and diluted earnings per share to come between $14.27 and $14.47. With regards to the power of 3 times 2, so the power of 3 times 2 growth plan calls for a doubling of the business from 2021 net revenue of $6.25 billion to $12.5 billion by 2026. The key pillars of the plan are product innovation, guest experience, and market expansion, and the growth strategy includes a plan to double men's, double e-commerce, and quadruple international net revenue relative to 2021. And as we've seen, international is growing quite fast, and you'd be surprised how many men actually enjoy their products. I've spoken with a good friend of mine, and he actually went to Lululemon to buy pants, nice casual pants that are stretchy, but you don't mind getting them dirty if you have kids or something like that, because you can put it in the washer and it's clean. You don't have to dry clean it, and it actually looks quite good. So I guess that's a great category to grow into it. Maybe I'll buy one myself. Let's see. Anyways, the stock right now, it seems like it has found some support, definitely right now with that rebound at those $300 areas, where previously we had also found some support. It was also oversold. So that's always, let's say, a better risk reward profile. Right now we sit at $345, which is just between the 50 and the 20-day moving average. The 200-day one sits at $395. So overall, to conclude, what you get here is again a company that is clearly not dead or not dying. It was basically a story of the stock got beaten hard, and so you get more clicks if you're negative on that company. But now with earnings, the company is proving, look, we're still very profitable, we're still growing, people still enjoy our products. Here we are, and now the stock is suddenly reflecting that yet again. That's about it for this video. Yes, I know it's not a high-tech company, it's not an AI company, but as we've seen before, you can make quite a lot of money outside of tech, outside of AI. Look at Abercrombie and Fitch, for example, have outperformed Nvidia by quite a lot in the last year. So that's about it for this video. Leave your thoughts and comments down in the section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.